The delay by the federal government in releasing the details of the forbearance package earlier promised to stockbrokers in the capital market has remained a concern to them. Good evening and welcome. Thank you for joining us on this week's edition of the program. I'm Chimezie Obi Iwago. Now, this week our focus is on the capital market and the forbearance package the federal government promised the stockbrokers. You could recall that in May this year, the finance minister at the annual general meeting of the African Development Bank in Tanzania said that the federal government will release a forbearance package to stockbrokers as part of measures to stimulate confidence in the Nigerian capital market, which should hopefully increase liquidity. However, the stockbrokers are yet to get the details of that. Now, my guest on the program is a capital market analyst and a player in the market, the managing director, ProShare Nigeria Limited, Mr. Femi Awoyemi. Do stay tuned. We'll be back shortly. Stockbrokers in the Nigerian capital market said they are worried by the delay in releasing the details of the forbearance package earlier promised by the finance minister, Dr. Ngozi Okonjo-Iweala. Now, however, most stockholders in the market believe that providing a stimulus package for the market operators will provide liquidity to the market and, of course, boost investors' confidence. Now, let's take a quick look at some of the issues. Since the beginning of this year, one of the issues paramount on the minds of stakeholders, especially investors and dealers in the Nigerian Stock Exchange, is how to break the effects of the financial downturn which hit the capital market 3 years ago. The negative impact of the global financial downturn and the effect of the banking subsector reforms by the Central Bank of Nigeria on the whole led to the highest level of investors' apathy in the 50-year history of the NSE. At the African Development Bank meeting held in Tanzania in May, the Finance Minister, Dr. Ngozi Okonjo-Iweala, said that since government, through the Assets Management Corporation of Nigeria, had intervened successfully and safeguarded the banks, the request for forbearance package by the stakeholders would also be granted. According to her, we are working on the forbearance. We have now agreed on it, and that we are going to implement it. We are having discussions about how to do it. 1 month after, stockbrokers are yet to get the details of the forbearance package, and this has created some anxiety and concerns among the stakeholders. Forbearance remains the only financial instrument needed to restore market confidence and provide liquidity at the NSE. And for others, there is more to be done if confidence must be restored in the market. It could be recalled that the Nigerian capital market, since the onset of the global financial depression in 2008 to March 2012, lost 4.6 trillion naira, owing mainly to the effects of banking consolidation and investors' loss of confidence. The forbearance is a relief package to assist some operators who took margin loans to buy shares which value were affected by the crisis in the Nigerian Stock Exchange. It is to help them offset the debts estimated at about 300 billion naira. The brokers have called on the federal government to expedite actions in extending the stimulus package to the capital market if it's serious about reviving the fortunes of the market. After the break, I'll be talking to the Managing Director, ProShare Nigeria Limited, Mr. Femi Awoyemi. Please don't go away.
It's a platform to ask and get answers to those personal questions bordering on your health. Every Saturday at 12:30 p.m. Medical and non-medical experts in simple language address nagging questions on nutrition and fitness, cardiovascular health, growth and development, reproductive health and first aid and safety, and a host of other health conditions on Health Matters. Health Matters dispels general misconception about certain health conditions. For a better understanding of how to improve your health, watch Health Matters live only on Channels TV.
Welcome back. Now, Mr. Femi Awoyemi believes that the stockbrokers need a stimulus package, but insists that that alone cannot solve the problems in the market. For him, until the government corrects the anomalies in the system, confidence may not return. He started by giving his views on the forbearance package.
We have to put these things in context. When the whole concept of the bad bank was being mooted by professionals in the industry, there were stockbrokers, people from the capital market sector, and there were people from the money market sector, the bankers. They all came together with the recognition that a substantial portion of about over 1 trillion of it were loans from the capital market side of the house, perhaps commercial loan, margin loan, share-backed loans. And it was understood then there was a single transaction. They were going to, the AMCON would buy the debts from the banks, and by so doing would naturally extend some form of relief for the brokers in terms of be it interest payments, moratorium on principals, or some form of forbearance. Now, one side of it had to be done and had been done. What I believe the minister is saying, which she said sometime May 31st, was that they were now working some modality to recognize, that recognizes that you cannot solve one side of the market and leave the other side of the market. You have to take the market together, and they are looking at some ways in which they can create some relief, especially to provide some help in terms of the demand side of the market, and so provide a little bit of some form of liquidity, some breathing space, and allow the market to pick itself up. I believe that is what the minister has in mind. It is not the same as debt forgiveness or a write-off. That's not on the cards.
Now, the finance minister had said this sometime in May, and between that time and now, do you think it's too short or too long for the government to really come up with whatever they think the package should look like? Because the stockbrokers seem to be quite agitated.
I think it's only natural for them to be concerned. I think it's also natural for them. I think that the concern is as to the nature, the structure of the forbearance. And it's also important that the forbearance does not send a wrong signal to those who complied with all the rules and behave themselves in the best practice, and that they are not seen to have been fools. So you don't reward bad deeds as well. And I think that, to the extent, is where I think the Ministry of Finance had been taking its time in making sure that they get the mix right. Now, I think it's also important you understand that there needed to be a classification of some of this relationship. Some of them are pure straight margin loans, for which the banks, the capital market operators are only liable up to 20% of their contribution in it. The risk in those transactions relate to the banks. But those represent a small proportion of the huge over $1 trillion debt in the market. The majority ones are some few things like share-backed loans and some outright commercial lending rates. So, and they would not treat you any different from any other commercial activity. But then, because this money relates to your ability, impacts upon your ability to function in the market, it is, for the past 3 years, impacting in some way, not the major reason, because you still got the debt issue, you got the breadth issue, you got the availability of the shares in the first place, but the liquidity in terms of the demand side is still a part of it. What they are worried about is that this forbearance must also come with some supply side or demand side support as well, i.e., how does the government see to it that the Sovereign Wealth Fund invests at least about 10% of its money locally in the market? How do the pension funds increase their level of investment in the capital market? How do we fast track the movement towards helping companies who want to list to do so much more better. So I think it's coming late in the day, but it's not too late. I believe, therefore, that the Ministry of Finance, in making its pronouncement, should be able to provide that stabilizing information that would help the market. But naturally, they're agitated because the market is really in difficult straits right now.
Now, some stakeholders have insisted that the forbearance is the only financial instrument needed to actually restore market confidence and provide liquidity to the market. Do you agree with that?
It's just a step in a series of many others that needs to be taken. It's not debt forgiveness. In fact, it should have been taken along with the decision by AMCON. When AMCON took over the debt from the bank, it should have been taken. It should be a natural extension. They're not two separate transactions. They're a single transaction.
Now, there's this argument by some shareholders that if the bailout under the forbearance package should be given to the stockbrokers, it's also proper for them to be considered. What's your take on that?
In the hierarchy of needs or people, or in the hierarchy of entitlements, the shareholders, unfortunately, do not have any numbers in the ranking. It's as simple as that. It's a caveat emptor market. I mean, their names do not come into this discussion at all. This is a conversation between operators and the financing institutions which give to them. We've always stood in position to defend shareholders. Now, if a shareholder had gone ahead and taken a margin facility, your liability is limited to the 20% you put in there. If the banks are holding you for a margin loan facility, then you can go to the locals. You do not have any right to pay any more than the 20%. More so, especially if the securities were with the banks, they carry the risk. And they should have known that before the 20% of your own contribution is wiped out in the market, and it didn't just happen overnight, they could have taken decisions to offset themselves. This conversation does not include them.
Another side of the argument from the shareholders is that if they cannot be given a bailout under the forbearance package, perhaps the breached banks, should be given back to them since they are part owners of the bank. What do you think?
When we talk about forbearance, it has nothing to do with the shareholders. We are talking about a commercial transaction that's distinct from an investment decision. And I think it's important to separate one from the other. They're not one and the same. I empathize with the people losing money. I think a lot of people have lost significant amounts of money. I understand that there are so many learning opportunities for us here, but for the regulators as well, whom one would expect to have done much more. And I know this does not assuage those who've lost money, but the conversation is not about investors who lost money. It's about operators who took risk beyond their capacity, even though there were no frameworks then, and that they are causing what you call it's having a systemic impact on the whole market and the economy. And this conversation is about how do we address that. And if you look at what has happened in other climes in the United States and the United Kingdom, they've had a series of interventions as well. And they've had a series of hit and misses as well. We've done our own very well. For example, in spite of the criticisms on AMCON, I think that what we are doing is more or less like the mold that which Spain is about to even engage on and try to do. And sometimes because we get emotional about some of the issues that affect our market as well, including myself as well. I believe that we sometimes miss the key points here. It's a very sad development, but right now the conversation is about the operators, the fund managers, the asset managers, those people who took those facilities in the bank and who are key market operators, and what can be done to deal with this burden hanging over their heads as part of the process of so many other things that need to be done, including resolving the regulatory hiatus we have in the Securities and Exchange Commission.
Really considered mergers and acquisitions for these operators, especially the stock brokers, you know, since they complain that most of them no longer have money to run their businesses, some of them are closing shop. Have you ever thought about considering mergers and acquisition?
Look, if truth must be told, there is serious problem. Careers are at stake, professional reputations are at stake, employments are at stake. Look, it is difficult for some companies to even run, to make payroll at the end of the month. It is that serious. And it's not just a conversation about theoretical postulations, it's about realities on the ground. The forbearance is just the minimum of it. It's just take it for granted. But like I said, it must be done in such a way that it doesn't send a message to people that you can go ahead and just commit as much and you will find a bad bank tomorrow and then you can get relief. We've reached this point because every other thing has not worked. The interventions of the regulators have not worked. The market hasn't moved an inch from where it was in 2008. So we've lost momentum, we've lost 4 years in between. And the market must come to the reality that, look, yes, we can preach those other rules, but we must resolve both the demand and the supply side of it. We have 4 categorical issues. The forbearance is just one of it. The most important one is that still, as we have it, we have a regulatory environment that cannot enforce even its own laws. The industry knows the things that were done, that are still being done as we speak, that undermines the whole capital market. This has to be resolved. We have issues relating to how do we create liquidity. We have market makers who cannot access funding to play the role for which they were set up. The NSE has taken some steps, but yet those steps may not even show itself. For example, the market makers initiative, which everybody consents to, and some may have their own doubts as to when and how it should happen. But if the market makers cannot access finance, how do you expect them to play their role? And so, to use the words of, I believe Mr. Bishop also used this very well. He said, we've got, the capital market needs to be, the conversation needs to be recalibrated. We've got the capital market, where capital is formed, principally the money markets, activities, treasury and whatever. But then you got the capital market where the trading activity takes place. So when we talk about the larger issues with the Nigerian capital market, we're not just talking about where we trade equities alone. We are looking at a situation whereby companies cannot even raise corporate bonds themselves because government is overcrowding it out in terms of how we put this treasury bill. If you can't raise corporate bonds, which is part of capital market activity, where do you go? So if you can't, okay, they give you forbearance, what are you going to be selling? The same old stocks you have in the market? You're not going to grow. And then how do you merge? Sometimes some people even argue from the extreme side of it and say that maybe it's a good thing, and then we can separate the wheat from the chaff. I mean, that's the principle of capitalism. Well, I say, hello, hold on. The same principle of capitalism allows the weak to drop by and the strong to survive. Yes, we understand it, but why did we come up with bailout today? Why didn't we just allow everybody to die off? It tells you that we must practice what you call reasoned capitalism in this 21st century to survive. When America made a series of initiatives, he allowed some to die off, he saved some, he provided support, he provided relief, but he stabilized this economy. He may not be achieving the huge growth he's doing, but he's done something. The president does not sleep when he watches, until he watches the Dow Jones, but the UK economy is almost the same thing. In our economy, there's a lack of kinship between our economy and our capital markets. And I use the plural, capital markets in plural now. Your fastest growing sectors are not having any kinship with your market. That may not be a problem you solve overnight, but we can start the process. And we say, clear out this forbearance burden on people's neck, and we use it to send a message to the industry. We all learn our lessons. We deal with those regulatory issues, those outstanding infractions, which continue to send a message that nothing has changed. It's not about doing ceremonies or embarking on tours or gifts. America did its own by actually taking action. Barclays Bank, the FSA sent a signal by punishing Barclays Bank for what he did recently. The board chairman, everybody, but you don't destroy those institutions, but you send a message that you will not tolerate it. It gives depositors, it gives investors confidence in the financial market. We keep on talking about confidence in the Nigerian market. Oh, we got confidence back in the banking system because of what the CBN did. It took action. It dealt with issues. It might not have resolved it. There might be issues as to approach, but we saw definite actions. In the capital market, the Securities and Exchange Commission every day further compromises itself.
Talking about regulatory issues, at what point do you think that's really cropped up in the market?
As far back as 2005, the market moved at a pace that stripped the regulators' capacity to respond. A combination of regulatory inertia, interference, or pure incompetence. I mean, as far back as 2005. Immediately the first salvo came up, we started making excuses for the rules. The capacity to cope with the volume created its own challenges on its own. The capacity to understand that the market had changed and the rules of engagement ought to change as well was also there. We did not respond. And then when the whole thing came on its head, we didn't take actions. And when we took actions in 2010, I believe, the management of these actions provides learning opportunity for everyone to see that what did we do right, what did we not do right. Look, there's so many things that if you talk to every man on the street, both the professional, the institutional investor, the retail investor, they will mention 1 or 2, 3 infractions for you. They will mention 1 or 2, 3 transactions, which when you were to take a look at it, you will not understand. Is this a serious economy? That those transactions are taking place and the regulator does not take any action on it? And then do you look at it and say, where else would they go to? Then how do you expect people to trust the market? It's not about doing branding or PR stuff. It's the action. If you were to take an action and then it sends a message to the industry, people who invest their money gain a sense that they'll be more comfortable with it. It's not just in terms of enforcement and supervision alone. It's in terms of creating the rules and the game plan for people to work with.
And the capital market probe, do you think that is a step in the right direction towards building confidence in the market? Really?
Any attempt to look at policies, to look at the practice, to look at the process of how the capital market has failed to recover should naturally be welcome. Having said that, however, the history of probes, its reports, its findings, its execution, its motivations does not provide such encouragement in this particular case. I think members of the capital market, the senior members of the capital market, are well informed enough. They are knowledgeable. They have the expertise to recognize that we are in a conundrum right now, and that beyond the House probe, they can on their own recognize what the issues are. If you cast your mind back and you look at what happened when the Dennis Odife panel reports came out sometime in 1979, I think under Michael Ani, we had reports. Only recently we've had a report of some eminent operators and experts in the industry put together a capital market report and came up with 36 recommendations. Only 2 recently, the Securities and Exchange Commission came up with its own roadmap as well, which are taking on the issues. Only recently, the NSC came up with some roadmaps as well. We are not devoid of people analyzing the problem. We can point to the problems ourselves. We feel it every day. We see it in our everyday activity. We see it in the returns on the market. I think we should move away from waiting for some probe to point us in the right direction and be responsible professionals and actually take decisions that would impact the future of this country. Position the capital market as a credible point where we can actually create growth for the Nigerian economy. That, for me, should be much more the focus than the probe. I think the House has the right to do its activities, but as professionals, we have the right to self-correct this market and then take the actions that will grow their new capital market that we all deserve.
All right, let's just hope we get it right. Thank you very much. It's been wonderful speaking with you.
Nice speaking with you. Thank you very much.
Well, I've been speaking with Mr. Femi Awoyemi, the Managing Director, ProShare Nigeria Limited. And that brings us to the end of this week's edition of the program. Thank you very much for watching, and do join us again same time next week. I'm Chimezie Obi Iwagu. Have a good evening.